Hello, Maverick traders. Welcome out to your market roundup. It's June 24th. Corey here with you. Now, we're going to take a look at meaningful news in the markets. We're going to look at sector rotations. An interesting rotation today where the equal weighted S&P outperformed the regular S&P, and we'll talk about what that means. And then we'll always highlight our very best trade ideas coming up soon.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
So markets had kind of an interesting day today. The Dow was up slightly, S&P about flat, NASDAQ down 1.3%. But we know that the biggest stocks are the most impactful in the S&P. What's interesting about today is the NASDAQ and the S&P went down, but the majority of stocks went up today. So what was happening? Well, you can start to see rotation. You can start to see that the momentum trade is coming off. And why do I say that? Well, Nvidia is down 13% in the past 3 days. Bitcoin has plunged down to 60,000. These are areas where there had been momentum. These are areas where that's kind of higher risk and gets a lot of attention when they're going up and so forth. But it's been coming off the last couple of days, and we're seeing this big divergence where the NASDAQ is sharply lower for the past 3 days. The equal weighted S&P, if you look at a chart of RSP, it's up the last 3 days. So money hasn't left stocks yet. It's just rotated to other stocks from the Nvidia of the world. Now, that's not guaranteed to continue to happen, but that's good news for the markets if that continues to happen, because what would be bad for markets is money leaving, right? Going into bonds, going into cash, going to the sidelines, what have you. For now, we're seeing some good examples of rotation and money broadening out into other sectors. Advanced decline line down 38% of stocks, but up 58%. Like we talked about, more stocks rallied today. And then the 50-period moving average has improved a little bit since last week. We've got 54% above, 46% below. Now let's take a look at this chart of the S&P. Like we said, we're backing off a little bit. We had a little bit of an exhaustion high here, a little bit of an expanded range push to the upside after an extended move. That's usually a little sign of exhaustion. The NASDAQ's a little bit more pronounced, and I'm looking at this candle as kind of the exhaustive one. So you can think of it in terms of you'd expect to see a big candle on a breakout when you're up, and then you see another big candle like that essentially is a breakout type of candle, but it's when you're elevated and extended away from moving averages and so on, it's a sign of exhaustion, and sure enough, we're getting the backing and filling like one would anticipate, one would expect after that type of candle. So where does that leave us in terms of this? Well, we touched on this candle last week. It's interesting in terms of market dynamics, and where we go from here is that with that exhaustive pattern, a couple of things can play out. One, which is good for markets, is you just get some backing and filling, and like we talked about, rotation happens within the market. Maybe the NASDAQ underperforms. The worst case scenario is that RSP and SPY go down together. Money leaves the markets. What will tell us is really how this behaves here in the next few days. If we sell off and then we cannot push to a new high and the bounce fails and we start to push again, then we've got a little bit more of a problem. Either way, I kind of suspect that that's what's likely to happen in the NASDAQ, is that we go through a little bit further correction. I don't think a new high is coming in the short term. I would anticipate, in other words, that we touch 460 before we go up to 490, for example. That would be my anticipation for this moving out. But other sectors could start to pick up the slack. So as we look at the heat map, the biggest squares are quite red, but more green on this than we've been seeing lately. More broadening out of the rally. Energy very strong, like we looked at earlier. Oil was up 1 point something percent. Financials, industrials, healthcare, some of these other sectors that haven't been performing as well, starting to pick up a little bit of the slack. But certainly energy was the outperformer. So from a broad market perspective, the S&P, the Nasdaq, I worry that they're too heavily weighted. Here's a little stat for you. Apple, Microsoft, and Nvidia combined are larger than the entire stock market was back in 2011. And 2011 wasn't the market low. That happened in 2009. By 2011, the markets had already doubled off the low, yet just those three companies are larger than the S&P 500 was at 2011. That's only 13 years ago. So we know that it's become a case where Apple and Microsoft and Nvidia are so massive, they're so important to what the S&P and the Nasdaq are doing day to day. I don't like where the indexes sit, but I have to say that other sectors can pick up the slack. And so picking your spots, sector rotation, things like that are going to be critical here if it plays out the way I think, which is that a lot of those large cap tech names start to underperform for a time. Maybe it's sideways while other things go up. Maybe it's down while other things don't go down as much. I would think we're at a little bit of a momentum tipping point. Now, as we look at possible ideas, certainly I'm not ready to short Nvidia or do anything like that. We've got to have the chart setups, we've got to have the dynamics in play. Here's what I've got for bullish and bearish candidates from the chart. So AMT, what do I like about this? Well, nice little pullback, starting to push back up. This looks like sort of a bull flag type pattern, and we're starting to push back above that. You can see it's corrected down and starting to get that upward turn. Whether this turns into a little bit of a cup and handle or anything of that sort, it just looks like it wants to go higher. We've got it pushing higher the last 3 days as things like the Nasdaq started to underperform. I like seeing that. Here we've got another stock. This is Merck. This is in the healthcare space. We have been in a trading range for some time, and today we broke out of that trading range and closed at a new multi-week, multi-month high for that matter. It happened as this rotation started to occur. Think about, again, the last 3 days, the NASDAQ underperformance. I'm looking for things that have outperformed, have the charts to support higher prices, and seem to be getting an influx of capital. I would anticipate that they will outperform. Now, what's lagging? Well, if things aren't bouncing in the last couple of days and they're already in downtrends, that is a very bad sign. That means that even though they've lagged, they still can't catch a bid, and they're in downtrends, which tells you that they've been selling off while the Nvidias and those things of the world, they're in like the worst case scenario. They can't even catch a bid when there's this big rotation happening. So looking at ARK Innovation, this is ARKK, you've got a descending triangle type of pattern. I would anticipate not only a push to 42, but a move through that is coming in the not too distant future. And Intel, not much of a bounce, just consolidating down here near the lows, kind of a descending triangle type of pattern or low base, whatever you want to call it. It is just bouncing here at the lows, and it's in danger of falling off the table that way. So Intel, INTC, again, just underperforming, bearish chart. We look for things that are acting weak even in an environment where they should be performing a little bit better the last couple of days. So will rotation occur within markets? Will RSP continue to outperform since it's an equal weighted, whereas the broad indexes that are heavily weighted to large cap tech names underperform? That's possible. Either way, I think it's kind of bad for the Apples and the Nvidias of the world in the not too distant future. Core PCE comes out on Friday, and this is a big number for the Fed that they consistently watch. It's expected to be at zero point 0.1, which is a low inflation number. Markets, you would think, would cheer that type of number on. Earnings reports, we've got Carnival, FedEx, General Mills, Micron, Nike, WBA, Walgreens. So some companies reporting, nothing too major, no shocks expected. Hope you enjoyed today's market roundup. Have a great week, everyone, and we will see you next time.